The broadcast is now starting. All attendees are in listen-only mode.
Welcome traders, it's Eddie here from TradeView. We'll be starting the webinar in about 1 minute. I'll be back soon. Welcome traders, it's Eddie here from TradeView. Welcome to tonight's webinar. We've got a fantastic webinar for you tonight, but before we get started, I've got an announcement. The announcement is we are launching, as of tonight, the 2019 International Trading Championship. We ran the Trading Championship last year. We had hundreds of entrants and some great results, and it's going to be live as of tonight. So we've been getting a lot of questions about people asking when's the Trading Championship starting. It is live as of tonight. I'll just give you a few quick details and you can come back with any questions. Basically, here is the leaderboard. These are last year's results. So you'll see the winner, Enzyme, on 97.67%, narrowly tipping out Allison on 96.34%. So some very close competition last year. Enzyme won the marathon competition, which was basically a 9-month competition, and he took home a $10,000 live IC Markets account. And a ticket to TradeView's Algo conference, plus a lot more. So the total first prize valued over $25,000. So well done to Enzyme. His name's actually Matt. And Allison, $5,000 IC Markets account, and some TradeView products as well. So fantastic work. There's some great prizes there. If you want to know more about the prizes, you can find out here. Basically, the way it works is there's two different types of championships. So the first championship is a sprint championship. And the sprint championships are roughly 3 months in duration. So as the name suggests, they're a little bit shorter. There's the prizes there. So the first sprint starts tonight, and you can trade up till the 30th of April is when is the last trading day. And after that, we pull the results. The next sprint starts 1st of May, the one after that, 1st of August. If you enter one of the sprint competitions, you're automatically entered into the marathon competition, which runs for the duration of the sprints. So basically, if you start now, you've got 4 different opportunities to win. You could win each sprint competition, or you could win the marathon competition, which is the major prize valued at over $25,000, including the $10,000 IC Markets account. Of course, thanks very much to IC Markets for putting up the prize. Yeah, basically, there's a really small minimum entry. It's live trading. You need to put up your own money. The minimum amount you need to put in is $200. So it's suitable for everyone. We had people last year put anything in from $200,000 to 150,000 euros. So it's up to you how you want to trade it. Obviously, you're going to have different kind of options that you want to do with your trading depending on how much you put in. So I'll leave that to you guys, but basically the winner is judged on percentage return at the end. You can enter now. What you need to do to enter is, actually, you can go here. There's some more FAQs here if you've got any questions and you want to read some more. To enter, you just click enter now. And basically, there's 2 ways to enter. If you don't have an IC Markets account, then you need to click this Start Trading button. That will prompt you to open an IC Markets account, and it will open an account specifically for the Trading Championship. If you do have an IC Markets account, then you need to contact support@icmarkets.com and email them and just say that you'd like to set up a trading championship account. And what they'll do is they'll set up an account for you. So that's if you already have an existing IC Markets account. They'll set one up specifically for the championship, and then you can just transfer your money into that. So if you don't have an account, please use this start trading button. If you do have an account, you won't be able to do it that way. You need to contact IC Markets support. If you've got any questions, you can email championship@tradeview.com.au. You can find the details on the site, but basically it's live as of tonight. These results will probably update after the first or second week. So if you enter and you start trading and you don't see the results, they'll be there in about a week or two. So I'm just going to post here quickly in the chat just the details if you want to enter. If you've got any questions, I'll hang around at the end and you can ask them there as well. So there's all the details. All right, a few questions there just quickly. Some people said, can I use the same account as last year? Actually, they've changed the accounts, so just the server that they run on. So you'll need to get them to transfer the money into the new account. If you've already got money in your old account, it shouldn't be a problem for them to do that. Just contact support@icmarkets.com. All right, now into the webinar. We've got a fantastic webinar for you tonight, and this one, as you've probably seen, is probably the reason why we've got so many people here tonight, is because we are going to be co-hosting this one with Larry Pesavento. Larry Pesavento is a 45-year veteran trader. We've got a little bit more information on him a bit later. As it stands, we've had a few technical issues trying to connect with Larry in the US, so hopefully they're rectified by the end of the webinar. We have been planning to get him on for the last portion, so hopefully Larry is able to come for the last portion, and we'll also tell you about the special webinar that we've got coming up in March that Larry's basically going to run. Okay. So this webinar, as we said, it's part of a series, and it's a strategy session series. So this first episode is on pattern trading, and what we're planning to do is we're planning to do 4 series this year, so 1 per quarter, and we're going to do basically a strategy session. So we start with a concept and we keep adding to the concept, and then we'll finish with a different special guest basically in the 3rd month, so at the end of each quarter. So this first month being Larry Pesavento, which we'll talk about a bit later. Pattern trading. I found this quote somewhere: we're evolutionarily wired to find patterns in nature. So pattern trading is a very big part of trading for a lot of people, and I think that's probably why we're actually evolutionarily wired to find and see different patterns. Here's our risk warning. Of course, this webinar is presented for information purposes only. You shouldn't regard it as financial product advice. If we do show any results or any test results, you have to understand that they're test results, and there's no guarantee of getting any results of anything going forward. We don't make any guarantees. Okay, just for those of you who are new to the webinars, a little bit about us. So we're a privately held prop trading firm, and we're based in Melbourne, Australia. This is our 8th year of operation. We've been sort of talking to a few people, clients and things that we talk to, but we literally moved office on Friday. So when I started 6 years ago, we were in, well, it wasn't such a small office then, but we've grown so big that the office did get very small, and we're in an office, I'd probably say 5 or 6 times maybe more bigger than we were before. So it's been a big move, and we've got some exciting stuff happening here. We've got 9 traders here on the trading desk, and the number of traders is growing. We've got some other staff as well, developers and admin and things like that as well. There's about 15 people. We trade all different products: equities, futures, options, forex, and money markets all around the world. And what we do is we're a systematic firm, so you'll get a little bit of a taste of that tonight. We follow a strict set of mechanical rules with our trading. All our trading is automated. When I first started trading 6 years ago, there weren't too many people who really understood algorithmic or automated trading, but I'm pretty confident that most of you guys there now have not only heard of it, but are probably doing it as well. And we run over 50 different proprietary trading strategies. So they're trading ideas that we've come up, we've built into automated systems, and we trade them. Just a little bit about me. Basically, I started off probably like most of you guys. In 2013, I read a book about trading and I got hooked on the markets. And basically, I just wanted to make money out of the markets like probably everybody else out there. I actually wanted to trade at a firm. So I wanted to trade, but I wanted to go and trade at a firm because my idea was that hopefully if I was good enough, they might give me some of their money to trade. Excuse me. I was lucky enough to get introduced to Rob, who's the owner of the business. Rob's been trading for a long time, and he suggested I come and do one of the programs that we run here and learn how to build some automated systems. I was interested in automation, but I didn't really know how to do it. I can't program, and I had a lot of ideas, most of which weren't very good, but they got better as I started building them. And now I'm here full-time building systems and obviously presenting the webinar for you guys. Now I've got some questions for you guys. If you've been to the webinars last year, we had a sort of a set of questions which I've actually changed up a bit this year. I want to know a little bit more about you guys so we can sort of tailor the content a little bit for you tonight and find out what you're looking for going forward. So just pop in the chat there for me, and we try and keep these webinars quite interactive. How long have you guys been trading? So 3 months, 6 months, 12 months or more? Stevie G, 12 months. Stevie G sounds familiar. I think he might be one of the new clients of ours. You know, there's a few people there I know. Mark, Larry, 55. All right. John. All right, Mike, over 10 years. Alexander, 2 years. 12 months for Clive. I think that must be 18 months for Damien. All right, 1 month for Mesut, 3 years for Oliver. All right, there's quite a lot of people there with over 12 months experience. But, you know, that's absolutely fine. Whether you have a small amount of experience or you have a lot of experience, I'm sure you're going to find something in this webinar that you probably haven't seen before. Who's already an automated trader? Like I said, when I started about 6 years ago, not many people really knew what automation was, and there wasn't very many automated traders. We really had to explain it to people when they came and did the programs with us. But now a lot of people are automated. So yeah, I want to know who is actually an automated trader. So Peter is, yep, Mark halfway there. Mitch is building some EAs, fantastic. Ara says, do I mean using EAs? Absolutely. Murray, no, not yet, Murray. David is starting automation. Marcus, we haven't seen Marcus for a little while. Good to have you. We know you are. Okay, Ellison, no. Stephen, no. Okay, Damien, sort of half. Okay, so there's quite a few people out there. Damien, another Damien says fully or semi-automated. Let's go either. So. Bernard, how you doing? Bernard actually, I can see, and he says he's building more EAs. Bernard actually won the first sprint competition we did last year in the trading championship. So well done, Bernard. Good to have you here tonight. And Ricardo, I knew someone would say it, not yet. Maurice actually makes a good point, has good ideas, and would like to. I'll tell you what, Maurice, the good thing, or Morris or Maurice, the good thing about building automated systems is take this the right way, but you're going to find out whether those ideas actually are good or not, because you're going to be able to test them out and see how they perform in back testing very quickly on many different products. So Maurice, when I first started, I thought I had a lot of good ideas. Some were, let's just say some weren't, but that's great. So looking forward to seeing some of your automated stuff. I'll put these two questions together because they sort of go hand in hand, but who's faced or is facing some challenges in their trading at the moment, And if so, what are they? All right. Consistency of returns, says Michael. I think that's a big one for a lot of people out there. Fantastic. Defining stop was a stop loss definition, says Damien. So probably working out where you want to put your stops. Not enough capital, says Luke. That's probably a problem for a lot of people as well. But I tell you what, Luke, I didn't have a lot of capital when I started, and that was actually the reason that inspired me to come to TradeView and learn, because I thought if I could build some good models, then I could get some capital to trade, which basically is what happened. All right, consistency of returns there for somebody else. Exit strategies. Cannot go a long time with a good trade. Discipline. Okay. Consistency, coming up with strategy of your own, says Ellison. Finding time to trade. Consistency. Seeing a lot of consistency there. So, okay. And stop losses. Okay, there's quite a few challenges there. Hopefully we can cover some of them tonight. Marcus says what to do over Brexit times. Okay. There's a lot of stuff there actually to do with, actually they're literally pouring in. I didn't think I'd get so many things. So it's good to hear that you guys do have challenges, because that means that we can probably help you to overcome some of them. So you're probably in the right place. All right. All right. There's plenty of questions there. I might have to come back to some of these a bit later, but thanks for sharing all of that. And last question, why did you guys come to the webinar? What was it you were looking for? Alexander says, need a great idea, but I think that might have been the answer to the last question. Knowledge, says Mark, to learn more, something that they don't know, says Alex. Learning more about trading, fresh ideas, says Murray, fantastic, and learning. All right, get more knowledge. All right, fantastic. Damien says, oh, it's going pretty fast there. Curiosity and see the depth of content shared and new knowledge. Look, I think we'll cover a fair bit of stuff, Damien, tonight for a free webinar, so I think you'll enjoy it. All right, most people want to learn more. I hear Mohit wants to understand algo trading and work and write code to translate ideas into algos. That you will definitely see. There's actually quite a lot of, again, this is going pretty fast on the chat. There's a lot of people here, so I might have to come back to that a bit later. But thanks, guys, for your answers. All right, let's get pretty much straight into it. What we're going to cover tonight, we're going to look at some common Forex patterns. We're going to look at patterns that you can trade, identifying reversal and breakout patterns, setting take profit targets. I know somebody there said, how do we set take profit targets or stop losses? We'll look at that as well. And also how market patterns can help you with support and resistance. Support and resistance is a question that we get quite often. How do we define it? So I think those of you who asked that question, you might find some answers tonight as well. All right, just quickly in this webinar series, I think we explained that. We'll move on. We do have a special guest tonight, as long as we can actually overcome those technical difficulties, which fingers crossed we can at the end. We'll have Larry Pesavento, and he'll also be presenting the last webinar of the series, which is, we call it a main event or a special event. It's going to be a bit longer. I won't go too much into it now. I'll talk about it a little bit later, so you need to stay around and find out about that. We're going to look at some of the patterns that have brought Larry success over the series of the webinar. And at the end of the series, we're actually going to automate one of Larry's strategies. And we're going to provide a pattern recognition indicator for those of you who attended the main event. So it's a really exciting series. I know I'm talking a lot about it, and I'll get on with the webinar in a sec. But yeah, basically, definitely come to all of these and make sure you're at that main event, because we'll give you an indicator that you're going to be able to use to build some automated systems at the main event. So some pretty exciting stuff there. All right. So first off, let's start taking a look at some common Forex patterns. Most common Forex patterns are classical technical analysis patterns. I know a lot of you guys out there are into your technical analysis. And these are witnessed in all markets, but they're definitely very prominent in the Forex market. So, we talk about Forex a lot in these webinars, but basically these patterns will be able to be found across pretty much all of the products that you can trade on the IC Markets MT4 platform. And these chart patterns are a fundamental component of technical analysis, as they really help identify behavior and also support and resistance. We'll talk a little bit more about support and resistance as we go through this webinar. All right. So first, let's start by taking a look at reversal patterns. The following classical patterns suggest the potential for reversal. Before I get into them, I want to see how much you guys know. Tell me some of the classical reversal patterns that you know. Just pop them there in the chat for me. All right, head and shoulders. Okay, David Wright, H&S. I was trying to figure that out, but then head and shoulders says Michael. I've got it. I'm with you. Pin, head and shoulders, bull and bear crowns, double top, double tweezer top, big shadow, cup and holder, head and shoulders, double top, hammer, hanging man. Okay. I don't think short the VIX is a pattern, but I'm sure a lot of people do that. The end of waves, double bottom, flags, shooting stars. Okay, there's a lot of stuff in there. I don't even think you got all the ones that we did, and there is many. So let's have a look at some of the ones that we're going to look at tonight. This is probably a favorite, double tops. Why do double tops happen? Anybody? What does a double top mean? I'm sure somebody's going to get this one. There you go. So Drew gives a pretty good answer, the retest of a high. So basically, as we said before, these type of classical patterns can give you a really good indication into what's actually happening in the markets, or what people in the markets are thinking and how they're acting. So basically, you've got price pushed up to a certain level, you've got a little bit of a pullback, you've got a retest of this level, and either we're going to break this level or price is going to reverse. So it's a really classic pattern, and it's something that's very tradable. So when we talk about patterns, we mentioned at the start, we're going to look for tradable patterns because that's obviously how we can make money, by taking a position. All right. Next, we've got head and shoulders. Somebody else said head and shoulders. So similar to your double top, you've actually had price push up to a certain level. You've had a sort of a major pullback, and you haven't been able to break that level again before continuing down. So that's a head and shoulders. A rising wedge is another pattern. Nobody mentioned the wedges. There's different types of wedges. Basically, who's seen this in the market? You get price consolidate, or even it's basically like this. Is basically the volatility gets less and less, crammed into a tighter space like a coiled spring, and then once it breaks a certain level, it absolutely goes for it. Who's seen that before? Yeah, plenty of people have seen that. All right, fantastic. So that's just sort of your wedge patterns, or the consolidating patterns. We have an expanding triangle. So that's a similar kind of thing where volatility is increasing. So basically the opposite of before. And then we have a triple top, which is basically another level to a double top. So we've tried to break a certain price level a couple of times. Basically, look, you can see here, what would you guys call these lines here? Let's say on this triple top, or the double top here or here. What do you guys call that? I mean, basically that is a type of support and resistance, isn't it? So there you go, Alex says support and resistance, fantastic. So there's many different ways to identify support and resistance, but that is definitely one of them. And we're going to show you a little bit later in this webinar how we actually build a double top. So if you're able to build that double top, then you're actually able to build that support and resistance, or identify what that level is, okay, which you can use in your automated trading. So we had a lot of people that say to us, I don't think you can build my strategy, it has support and resistance. Well, I'm going to show you tonight that you can actually identify those levels, and apart from that, there's many different ways that you can identify support and resistance. It really is up to you, but you can do it based on things like this. Next, we just basically have the same, but to the downside. They're your reversal patterns. Let's have a look at some of these now. So what's this one? Looks a bit different on the charts, doesn't it? Hint, it was one of the ones from before. All right. Double top, says everybody. Michael says, if there's time, can we cover how we determine the triple tops versus basic trading channels? You know what, Michael? I don't have it in the webinar, and I don't have any of the slides for it or anything to pull up. So, but I think you're a client of ours, so you can probably give us a call, and I'm definitely happy to go through it with you outside of the webinar. All right, double top. Everybody's pretty much figured that out. Okay, so there we go. That's a double top. So we can see that pattern there. We're going to actually build on this a little bit later. We'll explain why it is and sort of how we define that one, and then you can take that into account for some of the other patterns. All right, what's this one? This one might be a bit trickier. Well, not too many people. Oh, well, there we go. A wedge, says Alexander. A rising wedge, says, who said that one? David. Expanding triangle, says Michael. Would you look at that? All right, expanding wedge. I mean, look, there's probably different names for these kind of things, and we've just sort of picked some of the classical names, but it doesn't really matter what you call them, as long as you can identify how they work. But very good, guys. Very impressed. All right, so there we go. We got an expanding triangle. All right, now so we had a look there at some reversal patterns. Let's have a look at some continuation patterns. I can't remember if we had this slide in there, or maybe I've actually just missed it out when I'm putting it together. But basically, with these classical patterns, you can pretty much trade all of them as breakouts or reversals. So you can build breakout models and reversal models from them. So for those of you guys out there and girls who said that you're lacking ideas, well, here's some ideas right here. You can take these basic classical chart patterns and you can build breakout or reversal type systems off them. And if you can build sort of a basic breakout or reversal system, then you can continue to add to that. You can add other things, trailing stops, all sorts of things. Okay. So these ones suggest the potential for a continuation, as the name suggests. Okay, so we've got a symmetrical triangle. Again, some people might call this some kind of a wedge. Actually, before I go on with it, anyone else got any ideas of what might be some continuation patterns? Oh, Willem says bullish and bearish flags. Flag, says David. Flag, says Philip. Flag, says Michael. You guys are probably all hanging out at the same place. All right, we've got a rising triangle. So some of these are similar to before. We got the bullish flag. There you go. All you guys got that. A lot of people there said flags. Alexander as well. Fantastic. And then we've got basically the opposite side there. So you guys are pretty much right on the money. Out of curiosity, who trades these things now? A lot of people there were talking about flags and pennants. Who trades flags now? And let me take the question one step further. Who trades them automated? Josie does. Philip does. Yep, manually. Ricardo. No, Philip does it manually. A lot of people doing it manually. And to me, it was really exciting for me to put this webinar together because it wasn't really too difficult to build a basic version of a double top. Okay, so I'm not a programmer, so if I can do it, I'm pretty sure most of you guys out there can do it with a little bit of practice as well. So you guys can actually start building this stuff and automating it, and that's going to take your trading to a whole other level. All right, so some continuation patterns. Let's see how they work. So there's a symmetrical triangle. Okay, so we're looking for that break to the upside. What's this one? I think I've got you guys stumped. I think David's got it. Michael's got it. Philip's got it. The other David's sort of got it. Meredith's got it. Satinda's got it. Oh, there's quite a few people who've got it there. All right, fantastic. That is a bullish flag. All right, well done, guys. You guys are right onto this. If you can spot this stuff on the charts without, the rest of everything there, imagine what you're going to be able to do if you can start automating some of this. All right. As we said before, recognizing the patterns is one thing, but you really need to work out how you're going to trade these patterns, because it's all good seeing it and saying, fantastic, I've got a bullish flag there on the charts. And then if you sit on your hands and you don't place the trade, or, basically we do sit on our hands because systems place the trade. But if you don't take the trade, then you've pretty much got zero chance. Well, you've got zero chance of being able to make any money if you don't take the trade. So there's many ways to define and trade these patterns. As we said before, you can actually trade them a lot of them as breakout models or reversal type models. There we go, there's the slide. So all these patterns can be traded as both. And let's take a look at some examples now. So here's how you would trade these patterns as a reversal. Here we've got our double top. Okay, so what's happened in this scenario is we've basically formed the double top here, and we're retracing back to this level here, which is support. And then when we break this level here, then we're going to take the trade. Okay. Actually, sorry. Let me rephrase that. I've got a different picture. This one here, what this picture represents is we've had the first top. We've got here to the second top, and we're testing this level here. And what we're going to do is we're actually going to place the trade here, and then we're going to set our stop above it, and then we're looking for a move to the downside. So this actual level here is not really important. Sorry about that. And then same sort of scenario here for the head and shoulders. The one we're going to build later on is this one, the reversal type head and shoulders pattern. Then here we've got our rising wedge. So this one, we're looking for a break to the downside. What we're looking at doing with this one is basically as the volatility decreases, we're looking to place the trade with our stop above the wedge somewhere. So what happens is if we do get a break to the upside, we get stopped out quickly. And then if we get to move to the downside, we're in the trade in the right direction. Here we've got the expanding triangle, so same sort of scenario. As the triangle expands to a certain point, we're going to take the short trade there and put our stop above it. And here we've got our triple top, so similar to the double top. This time it's on the third test or the second test of this level made up here. We're going to place a sell trade here with our stop there. And this here is basically the opposite. So that's how you would trade these patterns if you were trading them as reversal type systems. Let's have a look at these same patterns and then have a look at how we would trade them as a breakout. Now with the breakouts, we need to break some kind of a level. So what we're doing here with this double top, so you can see how this is different. In this scenario, we're doing what I sort of started saying in the first place is we've tested this first level here and we've actually had the retracement. Now what we're looking for is we're looking for the break here of this, basically of this neckline. So that is a breakout style system. Let's have a look. We've got a few questions there. Satinder says, wouldn't it be better on confirmation of pattern? And David says, where would you place the exits, example profit target or some technical level? Great questions from both you guys. I think we've got the answers coming up. For Satinder, who says, would it be better on the confirmation of the pattern? We've got sort of two different options here. So with trading this, and there's no reason you can't do both. So with this one here, if you might be looking for some kind of a confirmation of a reversal here, which we can talk about a bit later when we build it, of a reversal, and you've got a small amount of risk if you take the short trade here because your stop is going to be very tight above this level here. if you take this trade here, as in when you start to break this neckline here, then you've got a little bit more risk because your stop is going to be up here, but you've got a bit more confirmation that you might be in a reversal type pattern. So, and looking to break this neckline here. So, both have their advantages, and I think both could be good trades. So there's no reason you can't actually trade both of them. And David says, yes, we'll cover some of those profit targets. All right. And then here, same thing. This is actually a break of this neckline. This one here is a break of this support. It's basically, this is a support level. Even though probably people are used to seeing horizontal support levels, this is a type of support level as well. Same here with the expanding triangle, and the triple top is basically the same kind of idea as the double top. Here we go. This is for David. So he read my mind. We did have this one coming up. So stop losses and take profits. Now, you're probably going to read the tagline underneath and say, well, duh, Eddie. I mean, obviously stop losses are set at areas where there's a likelihood of being wrong. But let me ask you guys a question. Who here sets their stop losses based on a percentage loss of their account? So the 1% rule or 2% rule or something like that. Don't lie. You got to tell me the truth. Okay, so Mitch, default 30 pips. Someone in there says never put a stop loss. Yes, says Murray. 0.5% of the account, says Mike. All right, 1% with 1-to-1 ratio. Bases it on candles, says Ricardo. Sometimes 0.2%, depends on the price action, 1.5%. So we've got all these different rules here. Okay, so if you're using a 1.5% or 2% or 1% or some percentage rule or some fixed amount of points, then what you're doing is chances are you're probably not setting your stop losses at area where there is a likelihood of being wrong. Let me actually explain what that means. I'll just go back a couple. So if you're going to take this as a reversal trade somewhere here, when you get some sort of a signal, and we'll have a look at it on the actual charts, as in a bounce off this level here. If you're going to set your stop somewhere by a percentage or a number of points, it doesn't really have anything to do with with necessarily where you're wrong. Basically, in this type of model, what you're looking for is you're looking for price to move down from this level here, and if it doesn't happen, then basically you're wrong. So you want to be able to set pretty tight stops. So the stops are set in an area where you can basically confirm that you're wrong. All right. So if you're using a percentage rule or fixed amount of points or something like that, you're probably not doing that. All right. So you might want to think about using that for many different types of models. I mean, we do have models, some models with fixed points and things like that. But you might want to think about putting your stop losses in an area where there's a likelihood of being wrong. Got a few questions there. All right. Okay, so Stefan, how you doing? Long time no speak. I used to have a fixed percentage and a location, but had to calculate the lot size each time. So some people do it that way. They calculate their lot size based on a percentage. On a percentage of a loss. Renault doesn't use stop losses. Okay, in these systems we're going to be using stop losses. All people do it very differently. I'm just reading some of the things there. All right. So it's interesting, isn't it? I thought, I've probably thought more people would actually put their stops in an area where they basically know they're wrong, but it looks like a lot of people are actually using fixed stops or some sort of percentage or calculation. So I think that's something you can definitely take a look at. That might be a little bit of a hint. All right. And then coming to, whose question was it? It was... I can't remember. There's so many questions. I think David's. Take profits. It's basically, he asked a very good question. With take profits, you can set them at a previous support or resistance level,
Or you could do something like a fixed ratio, say 1 to 3 or 1 to 5 relative to your stop loss. I think I've got some slides coming up on that. So to give you an idea, here's your double bottom. And this one's a take profits at a previous resistance. So you can see here is a previous area of resistance, okay? And in this one here, we're taking the entry here on the break of this area here, of this resistance level. So we can't obviously use this one. And then we're setting our profit target here at resistance, and here is our stop, somewhere here if we're wrong. Okay, if we were to take this as an actual reversal rather than the break of this level, then we might want to set our profit targets here at this area of resistance and our stop somewhere here. On the flip side, we could do something like this and use a, say, 1 to 2 risk reward profile. So what that looks like is if we're taking our entry here on the break, we know where we're going to set our stop loss up here. And then what we can do is we can double the distance and set that as our profit target. So that's another way you can do it as well. And that kind of stuff, of course, is very easy to automate. All right, a few questions here. There you go. Alexander says the stop should be defined by the risk. That's definitely one way you can do it. All right, there's a lot of people there. Very interesting. Glenn, he says his position size, you can position size against the percent risk. Look, I know a lot of people do that. We might not do that. Okay. All right, or Fibonacci extensions, says Drew. Exactly, you can use other indicators. I mean, it really is up to you. The great thing about building and testing systems is you can find out what has high probability of working, and you can basically trade it that way. Well, here's a couple of examples that work with the patterns themselves. So I think they're both quite good things to look at first. All right, so let's have a look at what a double top breakout looks like. So in this scenario, we're basically looking to break this level here. So, we've had the test of this here. This is the same picture as before, same chart, and we're looking to test this neckline here. So first, here's our breakout level, which is defined. So again, that's a support level. So if you are able to define this level here, well, straight away, guys, you've got support that you can use in your chart. And you're going to actually, if you can define a rule for that, you're able to repeat that in your automated systems. And there's your support levels for those of you who ask about support and resistance. And here's where we're going to set our stop loss. So if we do break above this, then we're going to say we're wrong. It's probably quite a big stop loss compared to if you took the trade obviously somewhere up here, and you can maybe adjust your take profits, and potentially you might want to trade a little bit smaller if you're going to be taking on a bit more risk. And then this is what we're looking for. Now, the interesting thing here, again, for those of you who wanted to discuss support and resistance, what you can see here, okay, is that we break the level on this bar here. So this is where we would enter the trade, and we actually retest this level, and you can see that this level, which was a support level, actually becomes a resistance level here, because we've tried to break back up and then we failed and we've closed again below that level, based on this candle with quite a long wick there. We've got a few questions there. How do you automate the recognition of support and resistance and the pattern, says Philip. And can you program the retest, says Willem. Absolutely you can. You can do both of those things. All right. Saddam thinks it's a very tight stop loss. All right. That's fantastic. That's why we have a market, because everyone has different opinions. So yeah, the answer to those questions, you can automate that support and resistance, and you also can automate and program the retest there as well. To give you guys a bit of a heads up, anything that you can see on the chart, I would be pretty confident that we could show you how to build. If you can see it, that means that it can be defined, and if it can be defined, then it can be built. Okay, so as long as you're able to see it and define it, then we can help you to build and automate it. Okay, so people have thrown all sorts of different stuff at us. Believe me, we can build it. All right, this one here is an expanding triangle breakout. So we have that breakout level, which is the support. Then when we break this level with this bar here, in this scenario, what we're going to do is we're setting the stop loss to the high of the previous bar to the one that broke the level. Okay, if you want to keep it a little bit tighter, your entry would be here. You could put your stop loss here. I think that might be a bit tight in case you get some kind of a retest, but I mean, you could try that also. So I would be putting my stop loss here on the high of the candle previous to the one that broke the support level. All right. Oh, this is a very great comment there from David. So thanks, David. I appreciate that. He said it's a big takeaway for me. I thought these patterns were very subjective, but it's interesting, isn't it, David? You actually can define these patterns, and then once you can define it, then you can build and automate it. Damien says, do we build it or do you teach how to build? We basically do both of them. We build all sorts of models ourselves, and we can help people to develop their own models. All right. Alexander, good question. He says, can I explain the psychology of the patterns? I can actually see, mate, I'm running out of time. So I would love to, but I'm happy to have the chat with you offline. Or if you hang around to the end and you remind me, happy to chat about it then. All right. So here's a continuation pattern. So this was the symmetrical triangle. So here's our breakout level here, which is the resistance. Here is where we're going to set our stop loss on this one, just basically at the bottom of this triangle. And then this is what we happen. So actually, we're going to set this one here because either this one is the breakout bar, depending on whether it actually just closed above it, or it's going to be this one. So we're going to set it basically on the bar prior to the one that broke out, or it might just be the breakout bar, depending. And then here we have our bullish flag continuation. So again, similar kind of idea. Here's our breakout level. And then here's what happens. And here's where we're going to set our stop loss. So here's the bar that broke the breakout level, or the resistance. And then we're going to set our stop loss at the low of the bar prior to that. Okay, so we're getting in here. Not risking a lot, and we've got a lot of upside. So that's basically how these patterns work, okay? And you'll find these on all different markets all the time. All right, let's talk about automating some of these classical patterns. Basically, I just mentioned before that any trading strategy you can see on the charts can be automated, and you can build without coding by using EA Lab. EA Lab is the tool that we've built ourselves, and what it allows traders to do is build automated models without having to code. So I can't code. If I didn't use EA Lab, then I couldn't build any models whatsoever. What we're going to do is we're going to quickly show you how we've automated a double top. I'm going to run out of time to do the actual build, but I can show you in EA Lab what the build looks like, and we could do a bit of a test to see where it places the trade on the charts. Before I actually go through and show you how to build it, we're going to sort of define it, all right? Now, there's different ways, like I said, there's many different ways that you can define this double top reversal, and there's many different things you can do at each stage, which I'll kind of briefly mention. So it really is up to you to test them and find out what's going to work best, but this is a really good starting point. So the first thing that we want to do is we want to identify the first peak, and the way that we want to identify that is we want to have a certain amount of bars before it and after it. And we also want to check how long it is, because you might get an area of consolidation with some kind of peak and bars lower on either side, but it might not really be, let's call it a big peak, or something that you would probably look at and call a double top. A few questions there. David says you could use a fractal to identify the high. Fractals only work on, I think it's 3 bars, isn't it? So if you want to only use 3 bars, you could. But you probably could use something like that, David. Actually, I think you can get those fractals that do more than 3 bars. So you could do something like that. We've got a few questions. All right, I'll come back to those a bit later. Basically, then you want to check the length of that peak. So you want to measure the distance from this top here, the high here, down to this level here. So there's a way for doing that. Then what we want to do is we want to check how many number of bars follow that peak, because it depends on, again, you can define this however you want, but to me, If you have, I don't know, you're on a 5-minute chart and you've got 300 bars in between this peak, whoops, and the next peak, to me that's not really a double top, because prices, people aren't trying to retest that level. Prices just sort of ended up there with many things happening in the middle. And then what you want to do is you want to see if the bar high or close, or however you want to look at it, is greater than the first peak. So what we're doing, the one we built, just to make it simple, and like I said, just show you a basic version, what we do is we use the close here, and then we say if the high is greater than the close here, then we're going to sell. But what you could do is you could actually wait for a down bar or some more kind of confirmation. It's entirely up to you, but I'll just show you the one we built. Those changes aren't really difficult to actually make to the model once you've got the basic version running. And then, yeah, what we want to do is we want to check if the bar high is greater than that first peak. Then what we're going to do is we're going to set our stop loss here on the high of this bar, and we're going to sell. And in this case, this is what happened. Okay, so why don't we go ahead and I'll just quickly show you in EA Lab what it looks like to build something like this. Like I said, we're going to run out of time, so I won't be able to build it. But this is basically it. To give you a bit of an idea, like I said, I can't program, so I built this in probably about 10 minutes. And the first version I built probably used twice as many blocks. It probably wasn't that pretty. But I got one of the guys here to neaten it up, but both versions did exactly the same thing. Okay, so it just goes to show you don't really need any programming experience. Pretty much anybody can do it. David is a form of programming. Really what it is it's a type of logic. So if you can define the logic of the system, then it's very easy to build. You don't need to know any specific code. So I can't read any code at all. But basically what we're doing here is we're checking for the peak in this first bit. And then we're saying that if we find a peak, we're going to set a level there on that peak. So I'll just bring up this again. We're going to set this level if we find a peak. Then what we're going to do is we're going to start counting the bars in between the peak. This bit here measures the distance as well. So then we're going to start counting these bars here from the first peak, and we're going to limit the amount of bars that are allowed to occur before the second peak. Because like I said, we don't want a ton of bars, and we don't want it to necessarily happen on the next bar either, because that's not really a double top. Then what we're going to do is if the bar high is greater than that first peak, that level we've defined, then we're going to sell. We're going to set our stop loss to the high of the previous bar. And on this one, we're just going to put our take profit at 100 points just to get it running. Okay, so that's the basic idea. With building here in EA Lab, we can actually help you to build anything you need. We give people who do our systems building program unlimited support. If you can tell us what you want to do, the next step basically is doing something like this and coming up with what the definition is, or a basic definition, and then from that we can help you build it. We can actually help you to define it as well if you're having trouble doing that. So wherever you're at, don't worry, we can actually help you to build it. All right, so that's the model in EA Lab. What you can do, for those of you who don't know, you can see the code if you are a programmer. I'm not, so it doesn't really mean anything to me. And then you just download the code, and it's basically an EA to be used in MT4. Speaking of which, let me pop up my MT4 platform. One moment, let me just find it. I've got a few platforms open here. Okay, here we go. Fantastic. So what I've done is I've actually set this one, I've downloaded it, and I've set it up to run just on the Euro, just to give you an example of how this works and how it places the trade. Okay, so this is just the very early stages of building a model based on that double top, but you're going to be able to see how it identifies the double top and how it places the trade. So some things I want you to watch out for. Hopefully you can see this on your computers. We've got here in the top left hand corner, we're going to put the price level of the first basically the first peak, and then when we break that price level is when we take the trade. So I'll start it up. And this is the price level before the date that we started, basically. So I'll start it up, and you're going to see that that is going to change. I'll stop it when it changes. So you can see now it's 1.1622. Okay, so now it says the first peak is 1.132. And you can see here, we've actually formed a peak, okay, because my rules are met. We've moved a certain distance. We've got a peak here. We've got a certain amount of bars here and here. And I'm going to tell you that this close here is going to be 1.13203, 1.132. We just leave off the last decimal there. But so that's this peak. So what that means is when we get a high that is higher than this close here, then we're going to sell. All right. So I think I can even step through bar by bar here. And there we go. So we actually got this high of this bar was higher than this close here. And then on the opening of the next bar, we sell. And if we go through bar by bar, what we've done is we've set our stop loss here. We've taken the trade here in the open of this bar. And remember, we just set our take profit to 100 points just to actually make it place the trade. So if we step through, we can see that takes profit. And then there you go. So it was only a small pullback in this case, but here was a double top with a little bit of a pullback. And what we can do by testing this, again, look, this, the take profit and everything was just to sort of to get it up and running, and also I'd probably add a little bit more to the definition, but this is the basic idea. So once you've got that basic idea, you can go through and you can test it, and then you can start improving the model. It's actually very rare that the first model you build is absolutely fantastic and works perfectly. You're probably going to need to build something basic, test it, see how it's working, and then continue to adapt it. So that's basically how it works, guys, how we can define something like a double top. And this one here was a reversal trade. Remember we were talking about that breakout trade before. If you wanted to do that, you'd be looking at a break of this level here. Or we could have also built something like that, and in this case, it never would have broken that level, so we wouldn't have taken the trade. Okay, so that's basically building some chart patterns. Who thinks they might be able to do that? Quite a few people. All right, fantastic. Damien says, does it place a stop loss once the candle is closed? In this case, it places it when it actually takes the trade. Michael's already building models like this. Fantastic. He says already started, so probably he's been following this webinar and building all along. Michael's a client of ours. All right. All right, let me continue. I'm just going to see if I can connect with Larry. Give me 1 second. The next bit is Larry's bit. Guys, it looks like unfortunately we're still having some technical problems. So I'm not going to be able to connect with Larry for this. So I'm going to have to do Larry's, basically Larry's slides at the end. But look, we will have him for the main event. So we were only planning to sort of introduce him and do a little bit of basic stuff in this one. But unfortunately, we're having some technical difficulties. So I apologize for that. But we will definitely have Larry for the main event. So I'll just push on with this. Okay, now we're going to have a look at some classical patterns, which is what we just looked at, versus some harmonic patterns. Okay, so classical patterns are simple patterns as a consequence of Dow theory. And if you're not sure what Dow theory is, I've got a great article on it. So if you want to contact me, I'm more than happy to show people where that is. Harmonic patterns and concepts have their roots in sacred geometry, so they're a little bit more involved than the patterns that we just looked at, and they're also a little bit different in the way that they work. These concepts and the foundations of these patterns were laid by H.M. Gartley in the early 20th century. And then what Larry's actually done, we'll talk about in a minute, he's worked with them and then further developed some of those patterns. So those patterns that we're talking about, they look like this, harmonic patterns. Now really Larry is the expert on harmonic patterns. This is not really my forte. So Larry is definitely better to run through all these types of patterns with you, which we will do definitely in the main event. So plan was to just sort of basically touch on them tonight and then run through some of these harmonic patterns, and in the main event actually build and automate them. All right. Gideon there says, what's the cost? I think of probably of EA Lab or the program. Gideon, we can actually probably run through that at the end. Okay, so here's a little bit about Larry. There is Larry. It's a really good picture. He does look like that. I have met Larry personally in Hong Kong. So Larry has improved upon these harmonic patterns over many years, and what he's done is he's used the patterns, and he's also added some Fibonacci ratios and further definitions to some of these more complex structures. And basically what we're going to be doing, like I said, is we're going to be automating one of Larry's models in a special event webinar in March. So you've got to make sure you come along for that one. I've got a little bit more details on the event in just a moment. So a little bit about Larry. One of Larry's quotes, trade what you see, not what you believe. I'll get Larry to introduce that and why he's come up with that quote, which he's quite well known for. Basically, a little bit about the special event on the 13th of March. So 13th of March, special event with Larry. There's a bit of information about Larry. He's a 45-year veteran trader. He started trading full-time in 1967. I was born in 1981. So to put that in perspective, Larry has been doing this a lot longer than I have. He's got an MBA in finance and a bachelor's in pharmacy. He managed the commodities department of Drexel Burnham Lambert in Southern California from 76 to 1981. There you go, when I was born. So he's been in the industry for a very long time. And in 1982 became a member of the Chicago Mercantile Exchange, where he's a local in the S&P currency pits. So you're going to be hearing from a real pit trader. I mean, I grew up with automated trading. So it's always fantastic to hear from people who've come all the way through from actually trading in a currency pit. So that's a fantastic experience that you're going to be able to learn from. So I'll let Larry talk a bit more about himself, of course, in the event, but this is a little bit of a heads up. It's a really exciting event. So here's some details of the event itself. We're going to call the event From Analysis to Automation, because we're going to take some of Larry's analysis and then we're actually going to automate it. Larry's going to talk about his trading techniques and harmonic patterns and how he uses them, and all that stuff based on his experience. And what we're going to do is we're going to sort of take a back seat, let Larry present basically the bulk of the webinar, and then we're going to automate his strategies. What we're going to do as well is the format is going to be Larry is going to be for around about an hour or so, and we're actually going to take about an hour of questions from you guys. So it's going to be a really interactive webinar. That's why you have to come, and you're going to be able to pretty much ask Larry anything. So fantastic experience to ask a master trader all the questions you've been burning to ask him. To register for the event, IC Markets is going to be providing the details really soon. They're going to send out an email, and it's going to take you to a website where you can register for the event. So full details of the event will be there, and IC is going to send that out very soon. I would probably think, without making any promises, within the next couple of days to a week. So very, very soon. And basically, of course, guys, this event is not to be missed. It's a rare opportunity to speak with someone like Larry and ask him some questions, and you're going to have him for 2 hours. So we're really trying to make this one a really special, really involved event. Even though I think these 1 hour webinars are fantastic, of course, this is going to be on a complete other level. So if you enjoy these webinars, then you absolutely must come to the webinar with Larry on the 13th of March. Also, just another note, Larry's going to be in Hong Kong after this event. So if you like the event, then and you're in Hong Kong, then you might, we can give you details on how you can come to Larry's event in Hong Kong. We're going to be there as well. So if you like what you see in the webinar, or if you want to get in ahead and get a ticket to that one, let me know and I can give you all the details. So that's in Hong Kong. It's in March. I think it's sort of around somewhere between the 20th and the 30th. So I can give you all the details about that. Basically, guys, thanks so much for attending. Like I said, unfortunately, we're unable to connect with Larry to get him to do the last bit of this webinar. I was really hoping to actually introduce him and let you hear from him himself as a bit of a teaser for the main event. But look, that Larry will definitely be there for the main event, and it's going to be a fantastic event as well. Look, if you guys have any questions, then you're more than welcome to send me an email or connect with me on Skype. Look, I do get a lot of questions and inquiries and things like that, so please bear with me. I will get back to everybody as soon as I can. I'm just going to pop my details there in the chat, and I'm going to hang around for any other questions. Sorry, guys, with this these webinars as well, I mean, I've got so much stuff that I can go through, and we do tend to run out of time, so sorry if I didn't get to answer everyone's questions, but we'll hang around now and answer any questions. So go for it. A couple of the guys there putting their emails in and things like that. Look, guys, I would love to try and reply to everybody, but there's going to be too many people. So if you want to contact me, please just email me, and then I will be able to either myself reply or get one of the traders here at TradeView to reply to you. Awesome. So Stefan says he's going to get the dust off his price action trading books. Stefan, you are absolutely going to love the webinar. You know what I think? I mean, I'm pretty sure you're in the UK, but I mean, hey, it's not that far to Hong Kong. I reckon you should actually come over to Hong Kong and see the presentation there. All right. Philip, there may be, so I see might send something out if there is. Alex, thank you. You're welcome. Mick, you're welcome. Soren, there may be. I see might send something out. All right, let's see if there's any more questions. There's quite a few questions. There was quite a few from earlier. I'll see if I can answer some. Okay, what is the cost? Says Gideon. Gideon, I think, look, I won't promote any of the stuff here online, but if you want to get in touch with us, then we can tell you about what's involved in using EA Lab and everything. So I don't really like to, I try not to promote too much at these webinars, but if you are interested, guys, in the program, then please contact me and I can explain to you how you're going to be able to build your own automated systems. We've got some of the traders here on the desk, so if you want to know a bit more information, you actually can call in now. So the number here, actually, I'll put it in the, oh, it's there. I'll post it here, or actually you call in, or you can get us on the live chat. So all right, there's a few more questions. Michael, that question I'm probably going to have to answer it another time for you, Michael. So I reckon give me a call and we can have a proper chat about it. I was probably a bit involved for probably the last 5 minutes, I reckon, but appreciate the question. Dell says, thanks, this is an eye-opener as a beginner. Fantastic. All right. Philip, probably IC will. Okay. James says, are all the webinars this riveting? Thanks, mate. Appreciate that. You said it was a real eye-opener. Ricardo, good question. He says, as a customer, can you guys help us build an EA if we're struggling? Absolutely. What we do with the programs is we give people unlimited support. So any help you need to build automated systems, you just need to contact us. So if you're already a client of ours, probably you'll know how to do that. If you're not, obviously you can become a client, give us a call, or get on the live chat with us and we can discuss that with you. But yes, basically what we do here is we run the development programs primarily for us to find good traders to sit on the trading desk. So we really like to try and help anybody that is keen to learn. So if you've got questions, support's unlimited, just ask. All right, I'll see if I can find a few more questions in here. Let's see, they actually rolled in pretty quickly, so. A few questions about the cost of the program. Yeah, guys, just contact me and we can let you know. Or you can just jump on the website, which is tradeview.com.au, and then you can inquire through the live chat there. All right, probably going to take another 30 seconds to a minute maybe with questions. Okay, Trago says how to identify a good trend. You know what? We've actually done some trend trading webinars. It probably is a bit longer question. This one was not specifically about trends, but we did do a trend trading webinar. I'll tell you what, Trago, if you ask us nicely, then we might be able to give you a link to it. I think I've got that one somewhere. So just give us a call. All right, Oliver says when a newbie is desperate. Okay, I'll read that one. It says when a newbie is desperate, they try to find anyone to assist them, and these aren't genuine people. What are the measures to stop this? Look, Oliver, I can't speak for anybody else. Basically, look, if you'd like us to help you, I mean, we do run a trading firm, and we do build automated trading models. So I'm pretty confident that we can help anybody that wants to develop further as a trader. What it is with trading as well, look, it does take a little bit of time. We're definitely not the sort of firm that will promise you, that you're going to make $1 million tomorrow or really quick results. But we are pretty confident that we can help pretty much anyone to build some good automated systems. So if you would like to know a bit more, then just get in contact with us and we can run through what that involves. No worries, mate. You're welcome. I said ELAB is for MT4. Okay, Trago, how can we identify stop loss with moving average lines? Again, these are good questions. I reckon you should maybe ping us a question. And look, you got a lot of questions. I think if you want us to help you build some models, building models it takes a little bit of work, and it involves all these questions that you're asking. So if you want to know a bit more about building models, maybe think about coming to do one of the programs with us. We'll show you how to build all types of models with all sorts of different things. All right. All right, guys, I'm going to finish it up there. Again, thanks very much to IC. That's probably somebody ringing in now. Thanks very much to IC for having us and presenting these webinars. Really looking forward to these series and the webinars this year. So, guys, make sure you come to the next one. If I can, I'll see if we can get Larry on for the next one. If not, I'm not sure what his availability is like for the next one. If not, then definitely for the main event. So the main event is the big one. So unfortunately, Matic says, so no Larry, so unfortunately not for this one. We haven't been able to get hold of him due to some technical difficulties, but hopefully for the next one, and then if not, definitely the third one. So absolutely definitely the third one. It's going to be a huge event. So all right, thanks very much, guys and girls. Really appreciate you coming to the webinar. Till next time, next webinar, good luck with your trading and bye for now.